Okay, we'll get started. Welcome to the Sunday pre-market meeting. So last week, we'll do a quick recap of last week, and then we'll move forwards into the watch list. So last week we had an interesting period. We had a couple of different things going on. We had the Bank of Japan, we had the Fed, we had the Bank of Canada as well. There wasn't anything overly interesting. I would say the Federal Reserve was probably the most anticipated one, and it did actually, in my opinion, give the most interesting insights into what we could be doing in the markets in the coming weeks. So the Federal Reserve cut rates by 25 basis points. I'm not going to go over the whole thing again. I think we've discussed it at length before when it happened. However, I think from everything I've looked into, everything I've read this weekend, it does seem like the best option is to continue to sell the dollar. Now, we've had a mixed reaction. Obviously, we had the rate cut, we had the statement, we saw the dollar take a dive. However, the dive wasn't overly dramatic, and we did see the dollar start to rise again once we had Powell give his press conference and elaborate more on the statement. And the reason we saw the dollar start to rebound here is not necessarily because we had a hawkish Fed. It was more because he ruled out aggressive rate cuts or an aggressive easing cycle. So that puts us in a position where the Fed will continue to cut rates. It's just not as aggressive as what the market seemed to have priced in. So that puts us now in a situation where the Fed continues to cut rates, but the dollar is rising. So I think we're still going to see the dollar get pressured over time. However, it might not be a situation where we just sell dollar and leave it, and it's as simple as that. We might see the dollar continue to gain some value in the short term and then start to depreciate further once we get rate cuts sparking up again. Whether that is exactly how it play out, I'm pretty certain it is, but of course, things change. We'd have to watch data as well, things such as inflation and the labor market, because obviously the 25 basis point cut was done as a risk protocol, as Powell said, or a risk management cut, mainly to appease the labor market and to see if that will be a benefit. So we're not 100% set on a solid cutting cycle, but again, we are expecting another one or two this year. So I'm quite content being a seller of the dollar. That puts us with a couple of different options. Now I've got a very limited watch list this week because we've already seen large moves in the markets, and there's just not that much I'm overly interested in, to be quite honest with you. I think the Aussie dollar against the New Zealand dollar could be quite a good play. We are looking at the RBNZ cutting rates. We've got the Aussie dollar, or the Australian economy, holding up quite well. It seems like the RBA is relatively steady on their path. So I will be looking to go long on the Aussie New Zealand at some point. Again, as I mentioned just before, we are seeing prices quite stretched at the moment. So I do need to see some pullbacks before I can start considering entries. But I think if we could pull back towards the 200 moving average, that would be a nice little mean reversion, and it would meet some minor levels of support here on the H4. Nothing too crazy, but essentially just buying the dip type of opportunity. I don't think we'd have a target here. Something I'm a little bit cautious with when it comes to the Aussie New Zealand is just the price action historically. So I've mentioned this quite a lot, and some of you may know, some of you may not, some of the newer people in the Discord. The Aussie New Zealand is a very, very range-bound currency on higher timeframes. It makes it amazing for mean reversion trades. So mean reversion, I'm not going to go into that too much, but mean reversion is essentially going against the trend and selling it back to its quote-unquote fair value, or the middle value. In this case, the Aussie New Zealand is becoming to the extreme points of its range-bound price action, and this is on a weekly time frame, keep in mind. So this has been pretty much established since sort of 2013, 2014. So I am a little bit cautious of being too heavily long, but I will attempt it probably until the previous high here at 1.14. Beyond there, I don't think we're going to break out, just because I don't think there's anything that warrants a huge rally, but I could see some further upside definitely on the way. So I will be looking to just continue a short-term long position on the Aussie New Zealand. Euro dollar. Now, I've been a bit of an advocate against Eurodollar longs, not because I don't believe in the idea, just because I didn't think it was going to be an easy trade. I thought there's much better opportunities. However, now we've got confirmed further rate cuts from the Fed. We've had a reasonable pullback here, and the ECB seems pretty fine. Actually, there's not really anything going on with the ECB. They seem very stable holding rates. So that gives us a nice central bank divergence. To potentially get, to potentially get Eurodollar to go to 1.2. Now, 1.2 is my cutoff zone. I don't care how strong the fundamentals are. I will not be trading long Eurodollar beyond 1.2. And the reason is just because 1.2 is a big sort of magnet level. We've had the ECB verbally call out 1.2 before. I think that was 1 or 2 months ago. And it's just one of those levels that if we do start breaking above 1.2, I think we might be in for maybe some shake up in the market. Not that when I say that, I'm not talking anonymously or anything too crazy. It's just, I think we might start seeing some sellers stepping around there. Now, I did mention, I think I put the screenshot in the Discord. Was it the monthly? Yeah, here. I put the screenshot in the Discord. I think it was Thursday or Friday, pointing out the Eurodollar monthly time frame. Oh, sorry, monthly time frame. My apologies. Now, 1.2 lines up very, very nicely with this monthly technicals. Now, of course, we don't trade off technicals around here. That's not what we do. We trade economics and then technicals come last. However, because this is a monthly time frame, I'm willing to put a little bit more weight on it, and I would be willing to possibly start a DCA short. And it'll be purely speculative, and it would not be a signal, but I like to tell you guys what I'm doing, even if I'm not actually calling the trade. So this would be, or this is, sort of the fib golden zone on the monthly time frame. It's also a very nice technical level. It was previously support and has then turned into a very strong resistance level. So I think if we can get Eurodollar to 1.2, I'd be very satisfied building up some short positions. Of course, when I say that, it'd be very small sizing and it would be very, very closely managed, but it's something I will consider when we get to that point. Of course, when we do get there, or if we get there, I will cover that in a bit more detail with you. Last thing I'll say about that is Eurodollar shorts are very, very nice to sit through because you get paid good swaps from being short. So that is a nice little bonus to add on to that. Anyway, let's move forwards. The pound US dollar. So this would be a little bit of a hedge really towards my dollar short bias, and this would be one I'd be quite happy to jump into pretty quickly if we get the opportunity to. So as I said, I'm quite happy to continue shorting dollar, but just while we are seeing this little rally, I don't want to be overly exposed against the trend, or get against the short-term trend at least. So it would give me an opportunity to be a seller of pound dollar. Now, why pound dollar? Well, because we've got quite a few problems within the UK actually fundamentally that could be quite a big weight against the pound. Now, I'm not expecting the pound to lose value across the board, which we'll go into another pound asset soon, or pound pair soon. However, I think against its major peers, such as the dollar and the euro, we are going to see a depreciation or a underperformance. So the Bank of England held rates with a split decision of 7-2. So there wasn't any huge call for rate cuts or any real rate disruptions, to be quite honest. Quantitative tightening was slowed from 100 billion to 70 billion, with a focus on shorter maturity gilts to avoid disrupting the long end of the curve. I am reading my notes here, by the way, so I might sound a little bit off when I'm reading or when I'm talking here. Guidance remains cautious and data dependent. A final cut in December is expected, followed by a gradual easing through 2026. Fiscal issues are now the primary risk for the pound, and this is what I wanted to highlight. As high short-term yields fade and long-term borrowing costs rise. So again, this isn't a theory on the pound collapsing against all its peers. This is purely against the US dollar and the euro. So I think we do have a valid argument to be short on the pound dollar. Again, it would also be mainly a nice hedge for dollar long positions. Sorry, dollar short positions. And that leaks into the euro pound long idea I've got here. We've obviously got the ECB that's pretty firm, pretty steady, holding rates. The euro economics in my view aren't great, but it's not a huge alarm bell for me, especially against the pound as we just discussed. So the technicals are a little bit of an issue because we are coming into this pretty strong resistance level that it makes it hard to be a buyer there. So I would only really consider being a buyer if we can see a pullback down into towards the 200 moving average will be completely valid. I wouldn't have a take profit on this one, and I would just leave it to run. So euro pound is very similar to what I mentioned with the Aussie New Zealand dollar in terms of its very mean reverting asset or very mean reverting pair. Now, we've not really seen that displayed here, but throughout sort of this period, we can see no matter what happened in this market, we always ended up reverting and continuing on a downtrend. So I'm a little bit cautious about being overly exposed. The same thing as I said with the Aussie New Zealand. So I'm not going to be heavily positioned. I won't be scaling in too much. It would very simply be entry, stop loss, and leave it to run with no take profit, and then just trail the stops with the market. Aussie US dollar. Now, again, as we mentioned, I am looking for the RBNZ to continue their rate cuts. I think we could definitely get the New Zealand US dollar go further to the short side. I think it's a very, very solid, sound theory. We've got a very nice target level as well down here. So it's hard to be a seller right now because, again, as I've already mentioned, we do have relatively stretched prices. So it makes it tricky, really, to be a seller as soon as market open, really. I mean, we wouldn't want to trade that anyway. But I think if we could get a very simple 50% retracement here, selling and then stop loss above the high, something along these lines, I think we could be pretty much set to let this run short for, well, really as long as needed, because the thing is if we can get this support level to break, we're going to see an inflow of sellers. The fundamentals are already bearish in my view for this pair, so it shouldn't really be an issue. It seems very straightforward. Pound Swiss, I'm considering being a buyer. I haven't done enough research to really warrant calling this a signal just yet. However, I did notice it, and I've noticed a couple of things here and there. So I've added it to the watch list to do a bit more of a deep dive on Monday, tomorrow. But this might be a signal. If I can validate and confirm it, I think we could be buyers at this support level and then continue higher. Now, this is a bit of a tricky one as well because we are on a very strong downtrend on the weekly and monthly timeframes. So overall, it does make a lot more sense to be buyers, although we do get quite a nice carry on this as well because we've got interest, I think we've got 0 interest rates actually in Switzerland. That's really bad. I can't think of it off the top of my head, to be quite honest. Either way, we get, again, a nice carry trade here because we do have higher interest rates in the UK, so we will get paid to be in this market. So it should be a very, very simple one to go through. Next up is Pound New Zealand. So I'm looking to be a buyer. Again, I'm not a huge fan of the pound, but I think we do have a reasonable option here. I don't really have a full technical setup yet. There's a couple of different options. If we see a bullish reaction here, we could be buyers on a break and retest, or we could see a very simple 50% retracement into the fib zone, catch up with the 200, and then go long off here. The technicals, all, when I talk about technicals, it's probably all very samey. My technical strategy doesn't change very much. Now, dollar Swiss, I'm actually already in a dollar Swiss short. I took a very, very small position around here, so I'm in a little bit of drawdown. I think it's a 0.03 lot size, so it's pretty meaningless, to be perfectly honest with you, but it was just my foot in the water. So again, this is just feeding into dollar shorts. There's not really anything to overthink or really explain here. I'm looking to just be a seller of the dollar, and I think we can do that against the Swiss. The Swiss is a stable currency. So again, not really much more to explain with that one. The dollar yen, again, very, very simple, straightforward. Although the Bank of Japan is not in a rush to hike rates, it seems like we are going to have a rate hike eventually. I've been saying this all year. So it's been very tricky to be a bull on the yen. However, we are approaching the period that I really do think we are going to get that rate hike coming soon. So if we can get dollar yen to either one of these highs, whether it be the high or the resistance we've got here around 1487, or if we can come slightly higher towards 150.7, that would, either one would be fine. I would attempt to go short on both, and then possibly with a take profit down here. Goldman Sachs and Nomura Research still have targets of 142, so I think we can get probably a very, very good trade to run. But again, it's just actually getting into this market might be tricky because we've been sideways for such a long period of time. Now, again, I just want to emphasize, when I'm saying dollar shorts, don't rush into the markets next week shorting dollars because of what you've heard here. It's going to be a little bit of a more difficult period than what we had over the past week and a half. We did very, very well. However, I'm kind of I'm not on pause, but I'm just taking a little bit more caution now because my views are getting a little bit clouded. And again, actually, sorry, I should probably specify, not clouded in terms of I don't know what I'm doing. It's just clouded in terms of I need to wait for the markets to sort of validate my ideas, if that makes sense. So gold and silver, still very, very good long opportunities in my opinion. It's just one of those things. I cannot seem to get into these markets. There has been no pullbacks. I managed to get a long position here. I took profits towards the market close around here, so I caught a nice little sort of day trade on silver, but it wasn't enough, and I wasn't happy enough to call it for you, unfortunately. It was like a 0.02, so again, it was a very small position just to see if I could get something running. I was actually wanting to get silver to come back down towards 40, and again, that would meet the 200 moving average. It would provide a very, very good opportunity to be a buyer. I'm still completely satisfied with the idea of being a buyer of silver on any dips. Unfortunately, we're not seeing many dips, or any dips at all, really. Same thing as gold. I would also be very, very happy to buy gold if we could see a larger pullback on sort of the H4 or daily, but we're just not seeing that, especially with the dollar strengthening. Maybe it could happen, but again, I'm not super, super convinced. So that concludes the watch list. Again, as I mentioned, it's not that comprehensive. There's nothing that is making me very excited. We do have a few positions open. I'm not going to show those on this webinar, though. You guys all know what they are. We sent an update on Friday. I'm just not going to show them because this does get uploaded to YouTube and they're all pretty close to entry, so I'm not giving free signals to people. So this is the edge finder as we go into the new week. So pound New Zealand, as we already mentioned, we would quite like to be buyers of. Aussie New Zealand, again, buyers. There's not really, even the edge finder is relatively flat. There's nothing other than pound New Zealand, Aussie New Zealand that is really of much interest. So that is pretty much it. If there's any questions, let me know now. But I'm just trying to think if there's anything else I need to mention. I don't think there is. I think, again, we've got interesting markets right now. Nothing complex to deal with, but it's more just a case of waiting to see what we're going to get over the next 1 to 2 weeks. So if we are paying attention to the dollar, which we should be, we have to watch inflation and we have to watch the labor market in general, so jolts, NFP, unemployment, that type of thing, and that way we can then start gauging. So just to quickly explain that, inflation up, we want rates to increase, and this is general rule. If the labor market's coming down, we want lower rates. They always follow each other. If the labor market is cooling, we want rates to cool. If the labor market's heating up, we want rates to heat up. Same thing with inflation. The problem we've got right now is inflation is relatively elevated. It's nothing too crazy. I think it was 2.9 or 3.1. Again, I can't remember off the top of my head. And we've got the labor market down. The Fed has just prioritized the labor market with that 25 basis point cut. So now it's excuse me. Now it's a case, what are we going to see come out of both of these sectors, essentially? We did already have unemployment come slightly down on the latest release. I think it was a day after we had the Fed, actually, unemployment slightly went down, which is good. So if we can see the labor market start to stabilize and we see rates continue higher, if we see inflation continue higher, then we could expect rates to go back on hold. However, if we now see the labor market start to stabilize and we see inflation coming down, we could be back on another path for easing. Same thing if we see labor market coming down or continue to worsen, and we see inflation start to come down as well, then we could start seeing more aggressive rate cuts. We'll go into that maybe if we start seeing that situation happen, but we're not there yet. It's more just a case of monitor what's happening and see what the situation will be when the time comes. Is the schedule back to normal? Yes, the schedule is back to normal. So I'll be live tomorrow morning, every London session now going forwards. And New York's more tricky. I'll probably be live Monday and Tuesday on YouTube for New York sessions. The problem I've got with live streams is that I'm on the Trader Nick stream on Wednesday, Thursdays and Fridays at 2:30. So it doesn't leave me much. That's literally New York open. So I can't do anything then, unfortunately. But yeah, you guys will have me for London sessions in the mornings. Guys, hopefully this has cleared up any questions or given you a bit of clarity. Again, not really much for me to do this week, it seems. We're going to have a pretty quiet one. But again, last week, I would say it was a very, very good week for us. So I'm not going to be too concerned that if we have a quiet week. Guys, like I said, enjoy the rest of your weekends, whatever's left of it. And I will see you all maybe tomorrow for London. If not, I'll see you in the Discord at some point. Enjoy the rest of your weeks, and I'll see you very, very soon.